Okay, so taxpayers can claim an adoption credit of 100% of qualified adoption expenses paid up to a maximum of $16,810 per eligible child that was adopted. So you adopt 2 children, that's doubled to what, 33,000, whatever. So there are, depending upon the adoption, there are different benefits of this. So the expenses include reasonable and necessary expenses, adoption fees, court costs, attorney fees, similar expenses directly related to the legal adoption of an eligible child. Travel expenses would be included in there as well. So if you're traveling, you have to travel somewhere to adopt the child. They do not include reimbursements under an employer program. There are some employers that will reimburse employees for their adoption expenses. So an eligible child is one who is under age 18 or is incapable of caring for themselves, but does not include a child of an individual spouse. So if you get, say you get remarried and you have a child and then the step parent adopts the child, it does not include those expenses. So you can't adopt your stepchildren and have it count. Obviously, as I mentioned here, so adoption proceedings are often take a long time, right? They can last over years, depending upon the complexities of it. Taxpayers will often pay expenses in a tax year other than the year in which the adoption becomes final. So if it takes, like if you start the adoption proceedings now and you spend $2,000 in 2015, but the adoption is not final until 2016, when do you get to deduct those expenses? In the case of expenses paid in the years before the adoption becomes final, they take the credit in the year immediately after it is paid. So if you're starting proceedings in this year, 2025, and it's not final until 2026, you're going to take those expenses actually in 2026, not in 2025. So the year immediately after it's paid. For expenses paid in the year the adoption is finalized or after, taxpayers will take the credit in the year that it's paid. But you're still going to be limited to $16,810, even though it's extending over several years. So that $16,810 applies to the adoption, not to the year. So for example, if I have, so now it's 2025 and we paid $2,000, and 2026 we paid $10,000, 2027 we paid, say, $5,000. So this $2,000 would be deductible in 2026. So if it was finalized, let's say it was finalized here. So deductible in 2026, $2,000. This would also be deductible this year because it was finalized this year. So now we are at $12,000. For the $5,000, we're still limited to $16,810. So the remaining, what do we have? $4,810 would be deductible here. So some of our expenses would not be deductible because we've exceeded that $16,810 per child. Okay, so if it's paid before it's finalized, you're going to get the deduction in the following year. You get all the other expenses you get to take in the year that it's finalized, or if it's after it's finalized, you can take those in that year, whatever year that is. So for example, like if you adopted a child and then maybe the birth parent challenged it later, right? And you've got attorney fees to go along with that challenge. Well, those attorney fees would then be like 2 years later, the birth birth parent challenges it, those 2 years later, those attorney fees, as long as the maximum hasn't been exceeded yet, those attorney fees will be deductible in that year. Okay? But the total adoption expenses over all years can't exceed what that maximum is. I'm not going to go through the example because I just gave you an example here. If the taxpayer adopts a child who is not a citizen or resident, so if it's a foreign adoption, the credit is allowed only in the year in which the adoption becomes final, or in a later year if the expenses were paid and occurred in a later year. So a foreign adoption is a little bit different. The same would apply here because it was finalized in the next year, but let's just say it was finalized in 2017, or I'm sorry, 2027. If it was finalized in 2027, then all of the whole 16,810 would be deductible in 2027 because that's when it was finalized. Okay, so a little bit different. And then if there were any additional, as long as that hasn't been exceeded, if there were any additional expenses in later years, they could be taken at that time. There are additional rules for a special needs child as well. Child who has a special factor or condition that a state agency determines prevents the child from being placed with adoptive parents without providing adoption assistance. So these are children that we would be going through the state agency for their adoption proceedings. Such a child has to be a U.S. citizen or resident, so it can't be a foreign adoption. Only like a foreign adoption of a special needs child would follow these other rules. But if it's a U.S. citizen or resident child and has been deemed a special needs child, taxpayers can take that full credit even if they didn't spend any money on it. So they get a $16,810 credit even if there was no expense to them, because oftentimes there is no expense because these are hard to adopt children. And so it's even harder to get people to adopt special needs kids if you then also have to pay all of the fees that are associated with that. So taxpayers will take the credit in the year the adoption becomes final. So I had a client who took advantage of this. They actually adopted two special needs kids. They were siblings. They adopted two special needs kids in the same year. So they didn't pay any tax that year. Let's see. So here's the form. 8839 qualified adoption expense. So you got to have the child's name, child's identifying number. So if it's a foreign adoption, you'd want to there would be a process for getting maybe not a social security number, but a taxpayer ID number for that child before they became a citizen. So whatever their identifying number is, and then the expenses as well. There is a phase out for it. So phase out starts when modified adjusted gross income, which same definition, begins when it exceeds $252,150, completely phases out when it reaches $292,150. It doesn't matter what the filing status is. So between those amounts, again, you're just going to take the top number in this case, subtract the modified AGI, whatever that modified AGI is, divide it by the phase out range, which is $40,000. Okay, so and this is this is the same method that we used for the student loan phase out, and it's a little bit different from the child tax phase out because that's based on $50 for every 1,000 or part of. But so if we had 267,000 as the modified AGI, we'd take the 292, what is this, 150, minus that, divided by 40,000, So 267. So 25,150. So this is 0.62, call it 0.629 to round it. And then we would multiply it by the 16,810. And this is the amount of the credit that they get. So $10,569. So that's the amount of the credit that they get. The fraction is going to be multiplied by the maximum allowed, not the total expenses. So if the total expenses exceed, well, it's going to be multiplied by either whichever is smaller, the maximum amount allowed or the total amount spent. Okay. If if they receive employer-provided adoption benefits, then you would subtract that amount from the amount of the credit to determine what the full credit is. There. And I actually do not know off the top of my head. Let's look at the form and see if there's anything. Adoption credit. Yes. So you can have a credit carry forward because like I said, I had these people adopted 2 kids and their income was nowhere near absorbing all of that credit, or actually the credit more than absorbed all of their tax, and so they would get a carry forward for the amount of credit that was left over. All right, questions?